Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, February 1st, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index have a counter trend bounce to lower highs of plus 0.4% last week after being down minus 0.6% the week prior, and continues to signal bearish on a 90-day trend duration. You have the euro versus the US dollar down minus 0.3% last week, taking its bullish trend gain down to plus 4.0% in the last 3 months alone. You have the yen versus the US dollar down minus 0.9% last week to now minus 0.1% in the last 3 months, moving its trend denomination from bullish to now neutral trend on a 90-day duration. And if you look at the British pound versus the US dollar, that was up 0.2% last week, taking its bullish trend gain now to plus 6.0% in the last 3 months alone. In terms of full cycle investing returns, clearly neither the bond market nor the commodities market cared about the long and short hedge fund degrossing of equity books last week, as you have the 10-year yield, i.e. the economic and profit cycle, didn't move with the 10-year yield back up to now plus 1.08%, and the CRB index, the commodities, up broadly another 0.8% on the week, taking its 1 and 3 month return down to plus 5.3% and 20.3% respectively. Breaking that down further, touching on corn, that continues to reinflate as it inflated another 9.3% last week, taking its 1 and 3 month gain down to plus 17.4% and 36.2% respectively. And touching on lumber, that continued to inflate another 11.4% last week, taking its 1 and 3 month return to plus 14.2 and 88.2% respectively. We'd be remiss if we didn't touch out on silver here, as that inflated 5.3% last week, taking that its 1 month, 3 month return now to plus 2.7 and 14.5% respectively. However, on the other side of that, you do have something like gold, which does continue to signal bearish trend on a 90-day duration, down another minus 0.4% last week, taking its 1 and 3 month return now to minus 1.6 and minus 1.1% respectively. Touching on global and emerging market equities, you had emerging markets correct minus 4.5% last week to now plus 13.7 in the last 3 months. A tremendous buying opportunity in Asia last week, with the Japanese Nikkei ramping up off the low end of the range, up 1.6% this morning and in the overnight. And you have India up 4.5% in the overnight, and Kospi ramping up another 2.7% respectively as well. And so just touching on last week's price action, the equity market in the VIX specifically, that which was up 51%. Our bias is that the episode in the VIX was episodic and non-trending, with immediate term downside to 19, which you want to continue to monitor is that trend at just about under 32, a little over 31. And so the bottom line here is numbers over narrative. So if you do have any further questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening, and keep your head up out there.